In this video, I am going to answer or attempt to answer questions from my Patreon members. I've got questions on specific stocks, questions on general market strategy and investing strategy, and some questions on Mark Minervini and Mark Minervini's private access, of which I've been a member of for about 3 years or so. Hey everybody, I'm Joe from Joe's Investment Express. Been investing since 1996. And like I said, I'm going to answer these questions. 3 things before we begin. Number 1, if you want me to answer your question, consider joining my Patreon. It's only $10 a month, and every weekend I do technical analysis of my portfolio and focus list, and I do some blog posts and Q&A sessions like this one. Number 2, please check out my partner Seeking Alpha Premium. I might showcase that on a particular stock or two somewhere in this video. Number 3, this is not investment advice. You need to make your own investing decisions. This is just for entertainment, just for education. And with that, let's get started with the questions. I printed the first one out from Caleb Whitfield. He says, thanks for your insight into cocoa. If and when the market reaches a point when many stocks have broken out of bases and the cheat entries are long gone, what are opportunities to enter then? Is it moving average pullbacks? Are there other strategies you can go over for us? All right, so a few ideas here. In terms of a specific stock, the method that I use, which is, I guess, the Minervini method, would be to get into a stock. The first opportunity would be at the low cheat, and I'll show some of those later in the video. And then a cheat, and then break out of a handle. And then after that would probably be the first bounce off of the first touch of the 50-day moving average. And then your concern or your question is, what do we do after that? So first of all, a strong stock will rally for up to a year and a half. And over that time, typically they make 3 or 4 bases, but sometimes they'll make 5, 6, 7, even more bases. When you look at some of the rallies in 2020, some of the real standout performers made a bunch of different bases. So if you miss the first base and you miss the first bounce off of the 50-day, wait for another base to set up. But be advised, it's kind of like the game of Jenga. With each subsequent base, it gets a little more risky and a little less likely that the base is going to hold up. Secondly, these breakouts are going to come in waves, and so you have the leaders in one or a few industries break out. Then you have the second tier stocks in that industry break out, and those are the ones you really want to be in, the leaders in the second tier. Then you usually have another wave or two of laggards, which are not, they're lagging, not leading, so they're not going to be as powerful, but you can play the breakouts on those. And then usually the money kind of moves around in the market from industry to industry. So, I mean, right now the biotechs and semiconductors are red hot, but then some of the money is going to shift to the retailers, and then, it might shift to, I don't know, the solar stocks or something. So when it seems like a particular industry is played out, a lot of times during an extendable market, other industries will kind of rise and take the place, or at least join the other industries. So yeah, those are my thoughts on that, Caleb. Well, so one other thing, eventually when the bull market gets long in the tooth, you're going to see a bunch of stocks that are really extended, that have gotten kind of parabolic. We see some climax selling. That's when we want to be selling those positions, starting to move to cash. And another thing you look for is the width of the market. During the strong bull market, maybe 60 or 70% of the stocks are going to be above their 200-day moving averages. And then as the market gets long in the tooth, fewer and fewer stocks are going to be over those moving averages. And so when the indexes are going up and the market grows narrower and narrower until it's very narrow, that is a big red flag. That's what we saw at the end of 2021. So here's the list of questions on Patreon. Let me just pick a few of the most interesting questions, do those first, and then I'll go back and I'll just do them in chronological order. This will be a fun one to talk about. William Sanchez says, Joe, can you talk about when you bought Tesla up to when it touched the 200-day SMA on March 18th, 2020? I'd like to know your thoughts because it had a roller coaster ride. All right, so William wants to talk about from when I bought it, 12/19/19, to when it touched the 200-day in March of 2020, right when the COVID market rally began. So let me give you just a little historical background on my Tesla purchase. First of all, if you've been with me for some time, you know that I really am a believer in forensic surgical entry points and exit points and controlling risk by 5 to 10% stops, maybe more like 4 to 7% stops actually, and selling on the way up and so forth. However, with Tesla and only with Tesla, I kind of threw those rules out the window and I just decided that I was just going to accumulate the stock due to the fundamental story. So partially because I owned Apple. I owned about $2,000 worth of Apple in 1999, and I owned a couple $1,000s of Netflix in the early 2000s, and those stocks alone would be worth, gosh, I don't know, hundreds of thousands of dollars, and all that I needed to do was nothing, right? All I needed to do was just hold on to them. So I remember that all of these years, and I thought to myself, if I ever come across a company that's truly disrupting the world, like Apple did or like Netflix did, albeit through the disrupting the movie industry, not quite as big as what Tesla's doing, that I would just buy and accumulate as long as the fundamentals looked good. And that's kind of what I did with Tesla. I actually was in it. My official buy that I showed my Patreon members was December 19th, 2019, but I actually was in it earlier and got shaken out. My cousin had a first generation Tesla and he talked a lot about how awesome it was. And then Elon Musk spoke at his son's college graduation, and my cousin talked about just how bizarre and simultaneously bizarre and intelligent Elon Musk was, and how it seemed like Elon was thinking about a whole bunch of other things in his head at the same time as he was giving the speech, etc. So that got me interested in Elon Musk. I watched a bunch of videos on him, and I discovered a little YouTuber, Galileo Russell, also who goes by Gally. Who's famously known as the YouTube guy. In when Elon was doing a Q&A on an earnings call, it must have been in, I don't know, 2018, 2019. He got frustrated with the analysts and he said, let's go to the YouTube guy. And he fielded a question from Galileo. Anyway, I started watching his videos and he was just showing how innovative the company's EVs were and how, EVs were going to be the future. And if they could just ramp up the Model 3, they were going to disrupt the auto industry, etc. And I believed it. So I actually got in. I was in here. I don't even remember. I owned in 2015 or 16. And then this wicked V bottom shook me out. And it's really too bad. I think I probably sold for split adjusted $12 a share or something. And I held on. And then I didn't get back in for all of this sideways action, and I finally got back in when it did a more traditional breakout. If we zoom in, this was the 15-year chart, and then this is the 5-year chart. So I finally got in when it made kind of a more traditional cup with handle, broke out of this handle, cleared a lot of this supply on good volume. That's when I finally got in, and then I just kept adding shares. I didn't mark all the times I added shares, but I just added shares as I could afford it each month and ramped it up. And this huge haircut, from 60 to 25 was terrible. It was absolutely painful financially and emotionally. But Galileo Russell kept saying that this was actually good for Tesla. They would be able to innovate their manufacturing plants while the plants were closed, and that the company had enough cash to get through it, even though it was really borderline. In any case, yeah, I held through that crash, and then in March 2020, the Federal Reserve said they were going to throw the kitchen sink at the economy and do everything they can to bolster things up, and it kicked off one of the great rallies of all time. So following Minervini's methods, and I guess my methods, I absolutely would have sold into this climax selling, but remembering my experience with Apple and Netflix, I just decided to keep holding until there was a big fundamental jump the shark moment, if you will, in the company. Now I did vary from that a little bit, and in 2022, when the market started to fall apart and it looked like Tesla was peaking, I did sell off a third of the shares, which turned out to be a good sell. And then I didn't buy any more shares for a year and a half or so, and then I very recently just added shares again for the first time in a long time in late May when it got above the 200-day. So far, so good. It's up, 10 days in a row or something, which I think 11 days in a row is the record. Okay, enough about that. Let's go to a different question. All right, Leanne asks, if you have too many positions, how do you decide which ones to sell when they all look so good? Well, that's a good problem to have, Lee. So the number of positions that you have to use Minervini's system is it evolves. So you're completely in cash during a bear market, and then you open up a handful of pilot positions, and if those are working, you open up a handful of more, etc. And ultimately, you're going to have 15 or 20 little pilot positions. And then as the market improves, you're going to want to narrow that down to 5 or 10 really big positions, consolidate your money, and that's how you make the big gains. Because a 50% gain in $1,000 a stock, that's only $500, right? It's only a few tanks of gas. But a 50% gain in a $10,000 position or $20,000 position, then you're making some real money. So eventually we want to consolidate. So there's a few ideas here. I wrote down a few ideas. So one thing you can do is which ones are leading and which ones are laggards. Maybe all of them are up, but some of them are moving up 3 or 4% a day, and some of them are moving up 0.5% a day, or 0.5%, 1% every couple days. Then you drop the laggards and you keep the leaders. Another thing you can do is look at the position size. So you begin with small pilot positions, and then when you add positions, you increase exponentially, right? So maybe you open a $500 position, then 1,000, and then a 2,000, then a 4,000, then 8,000. So some of these positions are going to be way bigger than others. So what I'm trying to say is another thing you can do is just sell off the little tiny positions. Even if the stock's doing fantastic, if you only have a few $100s in that position, even if it triples, you're not going to have much money. So what you can do is trim those small positions and watch them. And when they set up again, then you can, assuming the market is good and you're running hot, then you can reopen them as large positions. And then the other thing you can do is just let the market take you out of those. Don't really consider those part of your count, so to speak. Put them on the back burner, watch them, and as they go parabolic, sell into strength, or as they ultimately start giving off sell signals, then you sell those off and you consolidate down to 5 or 10 big winners. I wasn't super articulate. I hope that answered your question, Lee. I have that problem right now. I've got like, gosh, maybe 20 positions open, and some of them are small, and I'm just ramping up into some bigger positions, and I'm going to use the methods I just mentioned to gradually close those positions. All right, here's one more really interesting one, and then we'll just go in chronological order. Let's see. Andy said, "Hi, Joe. I am not a member of MPA, but I see a lot of negative reviews about his alerts, saying it's difficult to enter at the same price. I know MPA is not an alert service, but have you found the alerts useful, or have you had to scan stocks yourself with the intention to narrow down the results to match Mark's watch list as closely as possible?" All right, so Minervini, MPA is an education platform. It's like going to the University of Technical Analysis swing trading. It's not meant to be, here's my model portfolio, buy and sell exactly when I do, and you'll make millions. That being said, he does give buy alerts and sell alerts and so forth. And it's true, mere seconds after he mentions a breakout alert or says he's buying a stock out of a tight pivot point, a lot of times these stocks take off. And part of that is him moving the stock because he buys in very big blocks, and the MPA members join him. But a lot of times, it's institutions too, or every Mo, Curly, and Larry retail buyers running these things up. So what you need to do is you got to be ready beforehand. You either screen stocks on your own, or you have his focus list ready and you go through them, or do both. That's what I do. I look at his focus list and I run screens on MarketSmith, including the Minervini screens. You look at stocks that are set up with tight pivot points in bases that look like they're going to break out, and then you set alerts. And when the stock runs through your price, when the alert goes off, I get a text to my phone, then you buy it right then and there instead of waiting for Minervini tell you to buy it. Or when the market's really strong, you can actually set buy stops, and a buy stop with a buy limit. So when the stock runs through a certain price or down, if you're shorting, then the computer will automatically buy it for you. But you do want to do a buy stop with a limit, because if it gaps up 40% or something, you don't want to buy it up there automatically. And it really depends on the market too. In 2022, buying the breakouts was really pretty foolish, because that's when the institutions were selling, and most breakouts failed after a day or two. So during 2022, when breakouts happened, even when Mark would bring them to our attention or even buy them, a lot of times I would wait till midday or till the very end of the day, or even to the second day, to see if these breakouts would hold up. But yeah, in a bull market, and we're getting close, you do want to buy as close to the pivot points as you can, and set alerts on the stocks that look like they're going to break out, and then buy them when they break out. Don't wait for Minervini to tell you to buy. And then you'll find you'll buy a stock. If you're in MPA, this happens sometimes. You'll buy a stock, and then maybe 5 minutes later, Minervini will buy it, and that's a pretty good feeling. And as you can imagine, looking at 25 or 50 stocks on a focus list and an on-deck list, and setting all those alerts, it takes a lot of time, right? But no one said this would be easy. People want to spend an hour a week in the stock market and get rich. But if you want to really make good money at this consistently, year after year, you got to treat it as a job. You got to put in the work. It's as simple as that. All right, the 𝗦𝘂𝗽𝗽𝐻 podcast. He does, as the name suggests, a spy podcast. Check it out. I've listened to a few episodes now. They're fun. I'm a big fan of James Bond. Anyway, may I ask if you can go over cheats, low cheats, and then he wants to talk about SEPA too. So yeah, I didn't know about cheats and low cheats until I started learning from Mark Minervini. O'Neill, to my knowledge, didn't really do them. But it's pretty basic. I don't know about basic, but it's not that hard to get the hang of. Let me just show you a couple examples. All right, so O'Neill taught us to buy from the handle near the top of the pattern, but Minervini figured out that he could cheat and get in at a much better price and have not quite the high percentage of success as waiting for the handle, but pretty close. And especially with the big caps, a lot of times they don't make a really nice, pretty handle. So if you're waiting for the handle, it doesn't show up, and then you're locked out. And this is a perfect example. This is Lily, LLY, and so when you see a cup begin to form, so a stock will begin a downtrend and build the left side, which is usually pretty loose, and often the volume is elevated. And then when it appears that the stock is going to start the right side, now this is an art, right? It's a judgment call, it's subjective, it's an art. You draw a line right along here. Oh geez, let me just do it for you. Let me pause. Okay, so you draw a downtrend line. When the stock breaks the trend line and then successfully retests and starts going up again, that's what's known as our low cheat. So here it broke the trend line, retested, but then it continued down. Here it broke the trend line, retested right there, and then continued up, got above, in this case, the 200 and the 50-day. And so I bought the low cheat right there. Now, sometimes about halfway up or so, it'll make another little, a little pause pivot, and that's your cheat. And then you can add shares there. And then lastly, if you're lucky, it'll make a nice handle. Now, Lily started to make a little handle, but here and here, but these handles are too short, and the right side is so compressed that it really would have been risky to buy there. And thank goodness I bought the low cheat, because otherwise I would have had to get in on a higher risk entry point. So particularly with big caps like Lily, you want to try to get the low cheat or the cheat. Let me show you one more example. Oh, and by the way, if you'll humor me for 30 seconds, if you are interested in fundamental analysis, doing fundamental analysis on these companies with strong looking charts, I really encourage you to check out Seeking Alpha Premium. On Seeking Alpha Premium, there are dozens, hundreds, probably thousands of articles by analysts on every stock in the market, and all of the fundamental figures are located up here. But what I like best is reading these articles. So, Lilly has some really interesting obesity drugs and Alzheimer's drugs. You could read some of these articles and get a feel for the fundamental side of things. Now, let's go back, and I want to show you one other one. So let's get metaphysical and talk about cheating on the cheat, so to speak. So this is AEHR Test Systems. It's semiconductor stock. And honestly, you don't even have to wait for the low cheat. If a stock is in an uptrend, the first time it tags up with its 200-day, that's often a time when the institutions swoop in. So if you see the stocks in the first extended downtrend after a long uptrend, if you see a strong bounce off of the 200-day, that is a pretty good risk reward spot where you can buy the end of the day if it closes strongly to the upside, or the next day if it opens to the upside, and cheat on the low cheat, right? But here is our downtrend on the left side. So that's where I bought this one, and then it broke out retested. I suppose we could call this our retest or this, and then we would buy the low cheat would be right here. Now this one did make a good cheat. Our cheat would be right here, and then it really didn't set up. A lot of times it'll run right up to the lip here and then set up in a nice 10 to 20 day handle, and ideally you want to see the handle droop, but it didn't do that. It blasted right out, and again, that's why cheats are a good way to play stocks, is to get in on the cheat. Let me find one with a handle. Hold on. Okay, here's a base in 𝐼MVT. Here's the left side, breakout, pull back. Then when it starts going up, here's your low cheat. I missed the low cheat. I bought the cheat. And then when it ran up to the top of the lip, then it often, maybe half the time, makes a handle. And you want it to droop down. This droop is a little too severe. That's a little abnormal. I suppose it was probably right. Maybe that was earnings. But in any case, then you can buy the breakout of the handle, which would have been right there. Let's get on to the next question. Okay, and then Spybrary said, I'm struggling to come to grips with SEPA, or is it SEPA? SEPA, Minervini's system. Would love to hear you explain it. So this is like, you want me to explain Minervini's 40 years of strategy in a Q&A session. I can't really do that. But so SEPA is Minervini's system that he's developed over the years, specific entry point analysis. I'm just looking. Here's Trade Like a Stock Market Wizard. This is Minervini's first book where he talks about SEPA, and it's a combination of you want the stock to be in an uptrend. You want it to have it's best if it has strong fundamentals, although stocks sometimes can really run based on future expectations alone. You want there to be a catalyst. You want to have a really good low-risk entry point via tight pivot point and some of the things that I just showed you. And then there's a time to sell. You want to be very precise and surgical in your exit points. And I can't explain this to you, but if you stay with me as a member for, I don't know, a handful of weeks or months, I just try to copy Minervini's style with just a few other little twists. So if you stick with me, I will show you the SEPA method. All right, what else we got? Oh, and here's Indy's question again. Yeah, I cannot say enough good things about Minervini's private access. It has changed my life financially and confidence-wise and so forth as a trader. It's really expensive. It's $500 a month, and that is prohibitive. And I do disagree with the cost. I think it's more than it needs to be because it's really excluding so many young new traders out there. But in any case, if you can afford it, it's truly amazing, and it's something that you could just do for a year or two and go to school, so to speak. All right, JJ wanted me to talk about SNPS and CDNS. She says, I'm in both and they keep hitting all-time highs. That's awesome. Let's look at them real quick. So Synopsys is a computer software design stock. It's involved in the semiconductors. No wonder it's running. And it's a very profitable company. We see increasing earnings over the years. That's really good to see. No dividend and relative strength of 92. I really like to stay in, only buy stocks with a relative strength of 88 or higher. So that's good. Monthly chart. This has had a strong run for the last 15 years. You could really consider doing a long-term hold on this thing. And let's see. Earnings have been tepid, but it's all about future earnings, not necessarily the past. Sales have also been tepid. So this thing, I think it just exploded in sympathy with NVIDIA. NVIDIA gave its blockbuster announcements, talked about AI changing the world, and everything in the semiconductor industry, well, virtually everything ran up with it. So let's just look at this. Let me draw this up. All right, so it made a pretty interesting cup here. It was just so wide and loose along here. You really didn't get a good cheat just because of the volatility all along here. It did make a handle, but again, the handle was really loose. Buying off of the 50-day here in hindsight obviously would have been a good spot to get in. Here's the dreaded pop and squat. Well, here's a pop and squat, right? And here's another pop and squat. And then see how the price action tightened up and see how the volume came down. That was a good indication that the sellers are getting squeezed out of the stock and that it's going to go for real. So here would have been our place to buy right here. That may have been front running earnings, I'm not sure. But if that wasn't right before earnings, that would have been the spot to buy. Now, if you miss it, you could have bought this gap because it's only a 1.5%. I don't like to chase gaps up, but if it's less than, say, 2.5%, then I'll usually will do it. If it's over 2.5%, then I usually want to wait a while and see if it's going to hold the gap or not. If you miss it 50% or so of the time, the stock's going to pull back roughly to the top of the cup. And that's exactly what it did right here. So when you got this bounce, you could have bought it right here. Now this gap would have been too big, so I wouldn't have chased that gap. And now it's just consolidating and coming back in with the other semiconductors. I definitely would have, if I had bought right here, I would have been up 24%. I definitely would have sold on one of these wide-ranging, big volume days, selling into strength, and then I would have moved my stop to right here, moved my stop up with the 50-day, and waited to see if the 50-day would catch the price. Ideally, it's going to come back around before the 50-day and resume its uptrend. That would be an indication that the institutions are picking up shares and are not even going to wait until the 50-day. Yeah, good looking stock. So that's where I would have bought it. I would have sold part of it, and now I would have held the rest for a potential bigger move. And here's your other one, CDNS, another semiconductor stock. Great industry to be in right now. Monthly chart looks great. Long term, it's been running up since 2009. Weekly, it's a profitable company. It's been making more money every year. No dividend. 93 relative strength. I ignore the PE ratio. People get way too hung up on that. Numbers are decent. Earnings and sales numbers are decent. Not blockbuster, but it's all about potential, future potential in the semiconductors. Gross profit margin, they're making 88% gross profit margin. That is really outstanding. And again, this one just ran up with the semiconductors with NVIDIA. And here's the chart. Let's carve this one up again really quick. So here you've got a cup, and you've got kind of a head and shoulders in here. Here's your shoulder, here's your head, here's your shoulder. For these, you can draw a line across the neck. Now, there's artistry involved. You just have to decide where the neckline is going to be. And then you can buy when it crosses the neckline, or if you want to be a little more cautious, wait for it to retest. So it breaks through the neckline, pulls back, bounces. Here's your buy point right there. You would have nailed it. Made a bit of a handle, but that was really wide and short. Broke out. Here's a dreaded pop and squat like we've been seeing for a year and a half. But you could have bought this pullback buy. Pop squat, pullback buy, you could have bought it right there. Or this pullback buy right here. If you had bought the breakout, you still would have been in it. And then it ran up. I would have sold half at 10% or so right here due to the weakness of the market. And then the first retest of the 50-day, it got support around the 50-day, but boy, that was a colossal mess. I probably would have gotten shaken out here on this gap down. If you're still in it, it has run up 22% from the breakout point. It's definitely extended. Personally, I would have taken some off by now if you haven't already. And now, like NVIDIA, It's just consolidating. I would camp out. If you had bought right here or right here, then I would backstop right about here and just creep it up a few points beneath the 50-day. All right, let's see. Let's jump to someone else here. Dahl wanted to talk about VRRM. Yeah, this has been a good one so far. By the way, I'm looking at MarketSmith right now. This is also a good way to see fundamentals and so forth. Vera Mobility, developing the latest technology and intelligence to help make transportation safer and easier. Monthly chart, it's a fairly new IPO. Bucking Bronco for sure, but up and to the right. And it is a profitable company. Earnings are increasing, no dividend. Relative strength of 85. It's lower than I normally would buy, and it's because it's been sliding sideways while the market has been improving the last month or so. It's close though. It's close. Earnings and sales, pretty good. High single digits. Gross profit margins, 95%. That's outstanding. If that's, could that possibly be correct? I guess we're going to assume it is. Let's look at the chart on stock charts. Okay, so we got a fractal going on. You've got this wild bucking bronco of a cup with handle. Certainly, not very buyable. You could have cheated here in hindsight, but with all of this sloppy supply over here, I certainly wouldn't have done it. You could have bought this breakout, but that would have been risky because of the compression here on the right side. Popped and squatted, pulled down, probably shook everybody out. But so here's where it gets interesting. You got a cup with handle, but then you've got a cup with handle inside the cup with handle. And that is what's known as a fractal. And when a fractal happens, it usually improves the chart. So when it makes this handle, this is tighter, all right? And we could have made a case for buying the breakout of this handle, the handle, if you will, right here, and then ran up into this little bit of supply here and over here. So it makes sense that it would have pulled back, but it just pulls back to the top of the lip, which is perfectly normal. And you've got these wicks here that's indicating that an institution or a big fish is accumulating. And then whammo, it broke out for real. Is that when NVIDIA broke out? Maybe. In any case, you've got better volume, broke out for 2 days in a row, and now it's running hot. I would be thrilled to be in this right now. It's extended. If it curls back down to 18 and then continues up, you could do a secondary buy. Other than that, I would take some off. We're still in a pretty dicey market. I would probably take some off at 15% or so, and then move my stop up to backstop position as soon as possible, and then camp out beneath the 50-day, same as always. I'm just looking at VRRM on Seeking Alpha Premium here. I don't really know much about this thing. Company's riding some nice tailwinds. Attractive business with mid to high single digit revenue growth. Recent earnings increased my confidence. Great business with upside potential. Interesting. It would be interesting to read some of these articles in my spare time, right? Kevin wanted to talk about Oxy if Oxy is beginning the stage of creating a low cheat. Okay, I see beginner and experienced investors alike getting seduced, so to speak, by the holdings of Warren Buffett because he's such a legendary figure and we think that all he touches will turn to gold. But in reality, he buys the mega caps now. He's very conservative. And Berkshire Hathaway has underperformed the S&P 500, I think for like the last 10 years or something. So we should not be buying something just because Buffett is buying something. As you know, he's been scooping up shares of Oxy. Oxy is an oil exploration stock. The oil stocks are cyclical. They go up and down in cycles. These are stocks that you want to hold if you want to hold them for a few weeks or months, not for a few years, unless, if you're a senior and you need income and you have one that's paying a big dividend, you could make a case for using it as a dividend stock. But I'd stay away from the oils for the most part. I don't like the cyclical nature, and I haven't had very good success with them. Oil prices are coming down right now too, so I don't think it's a good time to be in the oils. And so you asked if it's starting a low cheat. I would say no. It certainly ran up during 2021, and I mean, it has made this downtrend, but it's so wide and loose. We certainly could draw, here's your downtrend line. If it breaks through this downtrend and retests, then technically that would be a low cheat, but it's not coming from a real well-defined uptrend. You've got all this sideways supply over here. These are trapped buyers that are angry. Some of these people here and here are still holding it, and here, and as it comes up, they're going to sell, and the swing traders are going to sell. So I just don't like the prospects of this one very much. Buffett has to buy stocks like this because he needs the liquidity, right? He's got to buy the Apples and the Oxys and the big stuffy insurance companies. I was just taking a look. So here's Netflix. So here's a cup. Here's the downtrend, break of the downtrend, retest. Here's your low cheat. And there's not nearly as many trapped buyers over here. There's not nearly as much supply. So that would be a much safer low cheat than Oxy. Or for that matter, cheating right here. And I just have time to do one more. Sorry, I can't get to all these questions. Charville is asking, could you please look at IOT trying to come out of IPO base? How would you play it? IPO bases are always fun because you're getting in on the ground floor, right? Let's see. I don't know anything about this stock. Samsara IoT provides an end-to-end solution that allows businesses that depend on physical operations to harness IoT data. Yeah, it is a recent IPO. Came out in 2020. Sure enough, this is a beautiful IPO base. Look at this. You've got classic double bottom. The second V undercuts the first V like it's supposed to. Here is a great spot to cheat. Here's a handle. You could buy off of the handle. And let's look at the numbers. It's not making any money yet. It has good sales though, 49, 48, 43 gross margin of 72. That's pretty good. Let's look at it on stock charts. Okay, so here we are on stockcharts.com. Here is your double bottom. First V, second V. You want it to undercut the first to shake out more shoe clerks. And then, I mean, you almost have, there's always patterns and patterns, right? You also have your shoulder, your head, your shoulder. Draw a line across the neck. Now, it's definitely an art. Maybe we do something like that, which would get you in right here. And here's your traditional handle up here, kind of a high handle. So it started to make a handle here, but it just wasn't developed enough, and it wedged up. We want it to sag down. Then you've got a cap. This is called a cap. This would have been really hard to get into because that was probably earnings. Yeah, sure enough, that was earnings, and you don't want to buy right in front of earnings. Now it is up a good 35%. So you want to be in the stock already is a short version. So how I would have played it, if it was on my radar, if I had liked the fundamentals and known the story, I would have definitely cheated and gotten in right here, or maybe more cautiously right here. We could call that a low cheat. We could call that the cheat. I don't think I would have gotten seduced into, well, it depends whether this tail came at the end of the day or not. If it opened here, I definitely might have bought it on this traditional breakout. It would have come down. Yeah, it probably would have stopped me out right there. Now, if you're not in it, I think it's too extended. You need to see it really make a more substantial base and or move sideways for quite a bit of time and let the 50-day catch up. Hopefully you're already in it. If you are, I like to sell into strength. I would take some off, a half of the position, a third, a quarter of the position, and then I would backstop, put my stop above my purchase price, and get it beneath this 500-day moving average, and just trail it up and wait for the stock to go parabolic or come down and knock me out. Guys, that is all the time I have. Thanks for listening. Let me know what your comments or thoughts. Really would love for you to join my Patreon. Link in the description in the comment section. If you appreciated this video, you're also welcome to buy me a coffee. Link in the description for that as well. Looking forward to another trading day tomorrow. Take care.